Greetings traders out there in Traderland. My name's Dez here at Grok Trade. This is the weekend edition, good through Sunday, December 8th, 2013. And let's start off with this. We're doing a free class. It's a free trading class on technical analysis. Go to the website, click on technical analysis, and get registered. And we're going to do it on Monday night. A lot of you guys watch Monday Night Football. No problemo. All you need to do is get registered, and what we'll do is make sure you get a recording after it. You don't want to miss it. Technical analysis at its best. Anyway, check this out. The S&P up 1.12% on Friday. Dow up 1.26%. The NASDAQ up 0.73 with the Russells up 0.79. So you do see the NASDAQ and Russells lagging what we're seeing in the Dow and the S&P. Banks up 1.65%, actually leading everybody. VIX down a staggering 8.6%, now below 14 at 13.79. Gold up 0.2%, silver up 0.4%, and crude oil up 0.34% with crude or US dollar at break even on Friday. And check this out, utilities, which is the defensive sector, up 1.2%. Now let's talk about this. Here on the S&P daily, we had this rising wedge. You'll see this line coming up right here. I made it a little thinner this time around, and I added another line coming across here off this bounce that we received on Friday. So we have a nice uptrend here. I think we're going to have some resistance. We're going to pop higher, maybe make these highs here, maybe a little higher, hit our head, and then drop again. We do have a bearish divergence here on the MACD. If you look here at the weekly chart, what's interesting is we went down, found support at this line that was resistance here, resistance here, resistance here. We broke resistance, came down, acting as support, rallied right back, building kind of a high base, which is pretty bullish. What's interesting is they're still saying, the Fed, they are saying that they could taper the buy program on the stimulus, and that should kill the markets, but it did not matter on Friday. Here's the monthly chart. That's not over with yet. Obviously, we're just getting started, but we're at a resistance point right here. And while we're here looking at the S&P, let's look at the spider. Put in SPY. Had a nice little pop here. I'm going to go to volume, and you'll see that we had a nice little tick higher for Friday. So Friday volume, not too shabby. Now here's the Dow, and we had this rising wedge. It did break down, went sub 20-day moving average, and then boom, right back higher. Volume pretty decent for a Friday. The weekly chart here went down, but on Friday people were buying up that weakness, and we rallied right back higher. On the monthly chart, we're still at a resistance point on the Dow. NASDAQ monthly is just up, and away. Right now we have a dragonfly doji, but we can't call it that yet because the markets haven't solidified. So this is still a dynamic candlestick, is by no means static. And the weekly, though, that's a static candlestick, and it is stopping with a tweezer top. And we also, not only do we have a tweezer top, but you have this doji, which is a dragonfly doji, at a resistance point. That's scary for a weekly chart. On the daily, we had this pop, boom, hammer at a resistance. So watch out for a big nasty red candlestick in which we have this rising wedge, which could break down. If you look down here at the MACD, we have this big gnarly looking bearish divergence. So danger out there for sure. Daily chart on small caps, nice bull pullback, and boom, nice little pop. And we have ourselves the weekly chart. Here went down, found support, rallied back. And then the monthly, tweezer top, but we're not closed out yet. And quick look at the VIX. VIX was higher, big gap down. On Friday for the week, we went higher, tagged the 100-day moving average, come right back down. So the further that drops, the more bullish it is. Remember, the VIX is a fear indicator. The higher the VIX goes, the more fear it's out there. Here's a gold weekly chart. And if you take a look here, we're at a big support area. And on the daily, you'll see that we still staying within this falling wedge. So look for a breakout to the upside. On the bull side, you'll see we're on falling wedge and we're at resistance. It's trying to break out. So watch for gold to take off. Silver, same way. Here's the daily. If silver popped up over a resistance line, came right back down, acting as support. For the weekly chart, you'll see that we went down here, tagged that support line that we had drawn. We come right back higher. We could start to go bullish. Anyway, Apple was off 1.4% on Friday. Up, 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 up. We hung up on this trend line. We have this trend line that goes way back. I'm going to make this trend line. Let's make this a different color. Let's actually make this, I don't know, green so we can see it. And you'll see support here, support here, support here. So there's a green line. Comes up here, resistance. That's what we're dealing with right now on a weekly chart. And on the daily chart, nice pop, just a bull pullback. Look for a support area right here to be looking for a purchase buy. Facebook, watch for a little pullback here on the daily. On the weekly, it's a buy. Get in like now and look for more upside potential. Google weekly, it's just up, up, and away, making new highs, gang. This is insane. Problem is on the daily, resistance, resistance, resistance. We stopped at resistance, so be careful. LinkedIn was up almost 3%. Boom, to the upside. We had a symmetrical triangle breakout, and here on the weekly, we can't get off of this lower area, so watch for a breakdown. That is really sobering. On the monthly, nice little bull pullback with a rally, but so far really light volume. Microsoft was up almost a full percent. What's interesting is we broke down, closed below it. We still can't get back up above that line, so we're still at resistance. Watch for more trouble to the downside. Look here at the weekly chart. Big run, nice big run. Watch for some red candlesticks to develop. Twitter on the weekly chart, boom, nice pop. Twitter here, boom. So we're back at a close on the daily Friday, where the IPO was just a few weeks back. And let's take a look at our bull list. This is bull list. Oh, this is a nice one. This one's up almost 5%. So a few weeks ago around $50. And now we got up to 75, a 50% gain in just a few weeks. Just huge pop. LOW, this had sunk. This went from 46 to 49. Had some trouble, but this is on our bull list, looking for upside potential. Yeah, just kind of filtering through. This one looks really nice. ICE. Wow, we're down here at 180, now at 218. Nice bull pullback with a pop there. On our bear list, racks, oh, it just continues down another 3.3%. Big drop. Zooms, wow, down from $30 to 25. It's anyway. So just a reminder, get registered right now. Hey, some of you guys are going to get an email. It came out Friday. Look for Friday for the invite. Click on the link and you'll get signed up, or just go to the website and get signed up here. Either or will do it. And if you just want to know how to become a better trader, here's your secrets free. Just get signed up for the 6 course here. And if you want to take advantage of our stock picks, make sure you go down here, look at our premium products. Stock picks is a good one. We have a mentorship actually coming up next weekend. Here's your time to do it in 2013 with a bang. Anyway, thank you for being a part. We sincerely appreciate you guys. And anyway, if you haven't done so yet, check out Mark's stocks video there at the website, and it's some great stuff. All right, share us with a friend if you'd be so kind. It's the best thanks you can give us.